Hello traders, this is Dan, Chief Option Strategist at Master Trader, and in this chart of the week I'm going to show you why with the S&P 500 ETF down almost 33% in the last few weeks from its high to today's low, why this is a fantastic time to be trading volatility. I'm going to show you why and how, and also trading volatility on individual stocks. This is the SIBO Volatility Index, VIX. It measures the implied volatility of out-of-the-money options of the S&P. And all it is it plots a squiggly line here. You cannot chart it. This is the S&P 500 ETF spiders. And you can see this was the drop that I was talking about, over 32% in a very short amount of time. When the VIX rises, it shows extreme fear in the markets because people are rushing to buy put options to protect their portfolio against downside or just speculating. So it's like buying insurance and because of hurricanes coming. Note here in the 2008 crisis, panic hit the street. We are in the middle of this perfect storm right now. This coronavirus pandemic is horrible. It's horrible. It's disrupting everybody's life worldwide. This is a worldwide problem. I'm not going to get into all the macro problems, but we are in a bad situation here, which has caused the market sell-off. But that is exactly the time to reap incredible rewards trading volatility on the short side, and I'm going to show you why. So yesterday, the VIX surged 43% to close at a record high, and it closed above this prior high. So it's an all-time high, folks. We're in very unique territory here. I read in Barron's last weekend that currently this drop from the coronavirus was the fastest. It only took 19 days to go into bear market territory. It's the fastest of record. Go to any market panic, recession in the past, any bear market, and even the 29 crash, the prior 2008 financial crisis. Pick any one you want. The 1987 Black Monday, none of them were this rapid. Let's continue. This is why. This is a monthly chart of the VXX. Now the VXX is a volatility ETF. It is created by the ETF manager trading the volatility futures. The VIX is just a mathematical calculation. You cannot trade it. You can only trade volatility ETFs, volatility options, and volatility futures, period. This has permanent headwinds on this product. Many novice traders and newsletter writers, as I say here, they're just clueless on how to trade volatility objectively and systematically. They don't understand how they're priced. We disagree with the old Wall Street axiom, when the VIX is low, it's time to go, because volatility can stay low for a long time. If you don't know what you're doing, trading volatility products, there's a very high likelihood you get run over. But if you trade them objectively like we do, they are tremendous opportunities lurking. And we think those opportunities have started today. This is what we call our market internals gauge. And we're price action pattern traders at Master Trader. We have the Master Trader strategies. We use other concepts, of course, like trends, support and resistance, moving averages, retracement analysis, relative strength, weakness, bar buy, etc. So the spiders here are in a downtrend. But we use these market internals. They are our gauges under the hood to tell us what's going on, and they help us determine probable reversal points. Sentiment is this one right here. It measures how bullish or bearish what we call the wrong way option traders. And let me explain that. when the option traders are getting too bullish, that means they're out there buying too many call options because they think the market's just going to go up forever. Look, right here, market drop. Right here, the prior high last month, we have been alerting our subscribers for 2 to 3 weeks. Danger, danger, the wrong way option traders are getting too bullish. That is a contrarian indicator to suggest lower prices. Now, our lower bands here, this is a moving average here, this red moving average, this green moving average. My 25, 30-year trading history, I've never seen it this low. It's at 1.4, which means even though we've dropped over 32% in the broader markets, the SPY, the wrong way option traders were still heavily loaded up on buying put options on the wrong side of the market. That is a huge danger, danger, danger sign to us for continuation on the short side. This is our breadth indicator. It's simply just a McClellan oscillator. It tells us if the overall markets are overbought or oversold. This green line here is our oversold line, or not oversold per se, but we're looking for signals of when these are in alignment, either bullish or bearish alignment. They are in bullish alignment right now of the broader market bearishness and the oversold indicator here of breadth. They're both in alignment, and that's telling us we are looking for a turn anytime now. But since we're price pattern traders, we're waiting to get our signal. Once those market internals have done their job, which they have, just put them aside. They've done their job. Now go to the charts for our entry. This is a strategy that we're going to use very aggressively in these times called selling bull put credit spreads. And very simply, we find a bullish turn, which because of the sell-off, most of these are going to be climactic buy setups, W bottoms, some type of gap reversal, strategies that we teach that says, yeah, that looks like a short-term bottom. These are different flavors in all kinds of environments, but we want to, so this is probably the best here, or maybe a breakdown failure like this, or maybe this. So these three on the bottom are probably the more likely scenario that we're going to get in today's environment. And we say, okay, that looks like beautiful support. We're going to sell an out of the money put. And because the volatility is so high right now, as I showed you, we are getting incredibly high inflated premiums for selling these put options to the put buyer. And what happens is they're buying puts for protection because they think the market's crashing and keep going lower with the coronavirus fear. And we say, well, I know there's a lot of fear in the market. I got my market internals signal. So I'm going to sell you that expensive put. So that's this green line. We sell it under support. And then we're going to buy a further out of the money put just to make it a put credit spread to limit our maximum loss and also reduce our buying power requirement at the brokerage firm. That money that we take is the difference of those two. That's our maximum credit that we profit from just by calling a short-term bottom. We make money 3 different ways in this. If the stock moves up, as the chart suggests, we make money. Through time decay, day by day that expires, we make money, and that's called theta for you option traders. And we also make money with the volatility contraction because I just showed you we're at record high VIX levels, record highs. So as that contracts, and I showed you the chart that says the long-term headwinds are in a downtrend, never in trading do I say with such certainty when the volatility gets this high, I don't know if it's going to happen tomorrow, in a week, or a month, 99+% certainty, that volatility will contract. And so we structure these trades to profit from that contraction coupled with the master trader chart analysis. This is an example of a put spread that we did on Disney. And I know it's not a volatility trade per se, other than showing you the massive premiums that are out there on the marketplace in times of high fear like now. I live in South Florida. My partner Greg does too. He's down in Miami Beach. And this is like a Category 5 storm being 2 days offshore. And Greg and I calling our homeowners insurance and saying, hey, you know what? I found out I'm underinsured. Can you sell me some homeowners insurance? And the broker would say, sure, sirs, I'd be happy to. But you better bring not one, you better bring 2 checkbooks because it's the premium's going to be pretty darn high. Let me show you an example of that. Disney here, it's sold off from 140 bucks down to 90. It's now bounced a little bit at $95. We shorted a $65 put for $1.63 a share. What does that mean? The stock can fall $30 in 7 days. That's what 7 DTE means. We are obligating ourselves to buy Disney at $65 a share on or before 7 days. It's at the discretion of the put buyer. But in return for that obligation, we took in $1.63 a share. So if you sell a 10 lot on this, you eat immediately $1,630 was deposited into your account. That is full profit, provided Disney closes above the $65 short strike price. But as you can see here, this is a real trade. We get to our alerts. These are the quotes. You can look at them later, but you can see here the 65s were the furthest out of the money, and we got filled in between the spread here at 163. Now, we said, you know what? I'll own Disney at 65 bucks. And then with a cost basis of 65 less 163. So the stock can fall 35% and we still make money, folks. This is an older chart, but I just want to show you how we trade volatility by using the spiders with volatility. This is a prior sell-off in the SPY. Just came crashing down. We got our bottoming tail. It gapped up, got its sea legs back. Implied volatility was just the highest it's been in the prior year, which is what IVR is referring to. Volatility VXX here, skyrocketed here. It's whipping around, it gapped down, it's starting to break down. That's when we want to take on bearish strategies and volatility products. Our go-to is selling out of the money bear call credit spreads with the high volatility. So this is 55. We would sell any bear call credit spread above 55. So folks, this in this prior crash and the 2018 crash, it went up to 55 and change. Look at it now, folks. This is today, March 18th, in the middle of the coronavirus fear. Climactic sell setup. It's normally in this just downtrend here until you get sell-offs, and then it spikes up, and it's like a whack-a-mole game to us. Whenever it spikes up and we get a reversal in the spiders, we're whacking it by shorting it. And today is the day to start doing that, folks. That's why I'm sending out this very timely video right now. There was intraday fear here, and then we got our topping tail closing like this to new multi-year highs here of 80. I already showed you the VIX closed at record highs. This is the time to trade volatility. Now, we also, this course here, this is our volatility course where I teach you. It's a 4-hour recorded online seminar, 65 pages of PDFs. I will teach you how to intelligently trade volatility products. Unlike, I don't like to talk negative about others, but I've seen so much junk out there that it just turns my stomach. I will teach you how to intelligently both buy volatility and sell volatility, but right now, folks, in the middle of this Category 5 hurricane, now is the time, in our opinion, provided our charts have follow through. The spiders, broader markets have bullish follow through, and we have a short-term bottom. Now is the time to trade bearish strategies on volatility ETFs, options, and futures. This course will teach you that. And because we're just so passionate about wanting to teach you this strategy, that so we have a little bump offer here. We're going to give you half off of this course. You go to mastertrader.com/volatility. Merely buy either my partner's swing trading course, and this will teach you, I don't care if you're a brand new trader, you've been trading a couple decades, this will amazingly increase your objective interpretation of how to read anything that moves, technical analysis. And this is required to even trade options, folks, because at Master Trader, we have this saying, no setup, no trade, no setup, no trade. If I do have a trade, do I want to trade stocks or options? And then do I want a directional trade or just an income trade? Like I said, with the bull or bear call or put credit spreads. I showed you the Disney put spread and the VXX call spread. So you buy either this course, swing trading course, or our Mastering Advanced Credit Spreads, which is a strategy I just talked about on those two, VXX or Disney. And we will give you the volatility course at half off. I hope that helps, folks. I know there's been a lot of fear, and you know, I hope everybody is being safe and, you know, not getting sick and being with their loved ones. I know there's a lot of damage to so many sectors. The oil sector, the cruise ships, the transports, the airlines, the restaurants. I mean, there's it's a lot of damage out there. But I just want you to help you capitalize on the tremendous opportunities, both short-term and long-term. And is this a long-term bottom? I have no idea. But do I think there's tremendous short-term opportunity, both for selling these credit spreads and also buying directional trades using stocks and options? Absolutely. So I hope this video is good timing for you also. Please join us. Check out the course. You can even see Greg and me live trading and navigating the markets intraday. Go to our website, mastertrader.com. You can take a trial for $7 to our green trading room. And it's not just showing you PDFs after the market's closed. You will see us engaged live in the market, you know, throughout the day. And that's where, you know, you see the proof of educators and traders, and we are both. Good trading, everyone. Welcome, and I hope to see you soon.